All right, so just wanted to jump on here real quick and answer a question that was posed to me in the Composer Discord by a guy named Iron Man. It was preceded by a longer post that I did, which someone else had asked a question about kind of what I'm doing and so on and so forth in Composer, and just explained, my history with Composer. That I was one of the first 10 users or so, and have been running capital. I think it started with $2,000. In actually, it was that point. It was in Alpaca, and just how it's developed for me. How I was initially running a lot of hedge fundy style, what I would call first or second generation strategies. Most recently, I've shifted into a lot of the Discord strategies, what I call third generation symphonies. And so let's just kind of get into his question here. Let me just reduce my screen just a tad. There we go. Iron Man. I have a couple of questions. Why do you have 80 symphonies? Is it more like throwing money at everything and see what sticks? Is that profitable in the long run? With fundamental analysis, you see quarterly results and see if a company is doing as expected despite drawdowns. You sell if your thesis doesn't hold after 1 or 2 quarters. Could you explain the part? I won't really assess until 2030. Sure. So let's get started. First, let me say this. I have significant capital elsewhere, and I wouldn't run it in this manner, meaning my composer strategies, my composer symphonies, if I didn't have this anchor, this golden parachute, if you will, in just vanilla index funds and some value stocks. So very conservative, very like blue chip type things, index funds. And that is something that's there. So it allows me, so to speak, it gives me the license, in my estimation, to be able to be more hyper aggressive in composer and do these type of things. So you say, why do you have the 80 symphony? So let me explain why. Let's go over to composer itself. You can see we're in up day here. Capital's around 250, 251. So the top two here are kind of, as I mentioned, sort of in the hedge fundy leverage ETFs, rebalancing. This is Ray Dalio's all weather, just leverage. This is kind of a permutation of hedge funding. You can see these two are down. I had many more that were in that manner that I've transitioned into the third generation. So let's just take Dippy Cutie version 3. You see, this is real capital here, 2675, and you can see it's 2953. So almost $300 in profit there. So let's click on it, and I'll show you why I run 80. So this is the live here. You can see this is my cost, 2675. This is where it is, the annualized 28.5. But let's go simulate it, because that's what I want to really show. And that'll go also to the 2030, the 2028, 2030 time frame. So look, you go on a 3-year basis here. You can see 79.7, and you can see 10,000 to 57. But what I want to do is, because as I mentioned, and as you can see in the screenshot, is for most of these, I'm doing like a $2,000 to $3,000 allocation. So let's kind of look at that. So it's 79.6, so the 2 turns into 11.5. But let's go back further. Let's go back to 2016. So now you're at 7 years. So if you take 7 years from today, we'd be at 2028. 7 years from today, we'd be at 2030. If we take 5 years from today, we'd be 2028. And so that's kind of what I'm thinking, that 2028, 2030 timeframe. And this is right between that 5 to 10 year. This is 7. So you can see 109.4. The 2000 turns into 350. So all it would take is for one of these 75 symphonies to perform in this manner. Now, is it guaranteed that will happen? Is it likely? Obviously, it's not guaranteed. But one of 75 need to perform in this manner. And again, even if it's half of this, you're at 175. So that's kind of the thought process. And again, the golden parachute of the other money that's indexed in very conservative allocations and such allows me to take risks that if this didn't perform or this was flat or this 250 turns into 100,000, that's unlikely, but is it the end of the world for me? No. So that just kind of gives you a sense. Let's even take it back further, because I think this one you can back test. Let's take this one 10 years. So 10 years, you're at 76. So this one 565. Let's take it back a bit further. Let's go. Let's see if we can go to, I don't know if we can, I think 2011 might be the, let's see here. Yeah, 1/4/2011. So let's go 2011. Just one last look here. So now we're going back 12, 64.8. So 796. So 2000 in the 11 years goes to this. And you can back test some of these Discord strategies that have outperformed and have significant alpha, 64.8% annualized, which is amazing. And there's others that perform higher. I mean, this is another one, high leverage. You can see it's much above even this. And then you see JJ's Canary Leverage Light. That's also running live in a similar return as the Dippy Cutie. But anyway, so that's kind of the idea, right? That I have a significant amount indexed, and I'm basically saying if one of these hits, if you will, if one of these does exceedingly well, then I've won the game. And so that's how that I'm in it for the long term. I'm not thinking like day to day, quarter to quarter, even 1 or 2 years, like maybe a day trader. I very much, even though this is a trading software, I very much have the soul of a Buffett, a Bogle, a long-term thinker than a day trader who's I'm up today, I'm down today, so on and so forth. So yeah, hopefully that answers your questions. Then you can see actually Jason Coase and Fox Machina give like different opinions on that, and it's actually great because as Jason mentioned, there are different schools of thought, and with him, he says, so I only have a handful of symphony styles that I run, and I don't consider any of them to be particularly overfit. So he's much more concentrated on some of the symphonies that he has and has tremendous belief in. So maybe he wouldn't want to run the 76. He'd want to run 5. But then you see Vox Machine is here saying, from my point of view, because I do basically the same things if I had that level of capital. Diversification, plain and simple. It would be difficult to suffer cluster failure with that many strategies. You'd have to try to do it, in my opinion. And he says here, we don't know what the future will hold, but we do know it won't repeat. You need to give the strategies time to work to see if the market regime that we're built for continues, or if it stops working, the strategy becomes dead weight in the portfolio. Exactly. And my point, I would agree with him there. And I would say my point is, if just one over a 7 to 10 year time frame does well, then I win. So again, no guarantees that happens. And just I want to just do one last thing before I turn off the camera. And you can see some of these third generation symphonies, doing quite well. You have Moonshot here, 3,000 to 3085. You see Dippy Cutie, which I discussed. Again, this is real capital. This isn't hypotheticals. This isn't back testing. This is from my checking account. 2,095 went in, allocated. Now that's worth this. You see 2,000. This is a great second generation symphony, which is when there's just a small amount of logic, maybe one if this, then that statement. But you can see it doing quite well. Everyone in the Discord knows the TQQQ for the long term. This is version 3, doing well. This is, again, a similar variation, that second generation symphony. Another TQQQ for the long term. This is J. Long Jung's doing well. Order 66, doing. So these are all symphonies that are performing as of now as they have back tested, meaning they're attaining alpha presently. So we'll see. And I'm happy to do screen shares and continue to share my portfolio. If this craters down, to 200, I'm happy to share that. If this is at 350, I'm happy to share that. So, anyways, appreciate the question, Iron Man, and happy to do more. Take care. Ciao.